Right, yes, boys. Today I'm going to go through an absolute textbook trade that I took yesterday on Thursday. I'm going to give you a little run through of exactly what I was looking for and the reasons that I took this trade. If you guys are tuning into our lives and stuff, you know right now you have to be looking at oil. There was clear escalation in the Middle East. There was definitely no de-escalation. So at the start of this week, I was looking for oil to come higher, right? So if you have a look over at oil, I was expecting higher prices on oil. So you can see we're clearly bullish here, right? We're clearly bullish. We did have a drop off, but again, prices don't just move in one direction. So retracements are always necessary. But you can see this price action here from the start of this week that we were just clearly bullish within here. We've had a little bit of drop off today, but again, prices don't move in one direction. So yeah, due to the escalation in the Middle East, we were expecting higher oil prices. The reason for this is because if there is more of a disruption to supply, it's simple supply and demand, right? If supply falls, then demand increases, and then obviously price increases as well. So higher oil prices naturally lead to inflationary pressures. Now, it's going to lead to inflationary pressures across all central banks, but the US are directly involved in this war, so they're going to feel these inflation pressures quite heavily. So if we move on to the US bonds, again, clear bullish structure here. We were looking for higher prices on US bonds, expecting US bonds to come higher, and that's what we got, right? So based on this, we were expecting higher dollar. And not only that as well, if we have a look over here, we can see that the possibilities for a rate hikes are only increasing. So you can see here, in July it's not too much, 2.1%, but you come to September, we're at 14% now, October 23%, December 35% here. So there's clear want for rate hikes in the US. So a higher dollar is what we're expecting off of all of this. Now, if you're tuning into the lives and you're keeping on top of our content and what we're saying, you should know all this, right? You know we're looking at oil, you know we're looking at US bonds, you know we're looking at macro. On top of this, we also had PPI and CPI this week, which both come out positive for the dollar. So again, inflationary pressures, man. You're seeing that inflation's coming in hot, and this is not only consumer prices with CPI, but it's also producer prices on top of this. Now, of course, after looking at all this, we're going to be wanting to long the dollar. Now, if we're longing the dollar, that means we're shorting anything against the dollar. For example, Euro USD. So at this point on Thursday, I was looking for these shorts, right? I was looking for these shorts on Euro. If I just head over to FX replay and I can run through this trade with you and exactly what I was looking at in real time. So again, after going through all of the macro narrative, the geopolitical tensions, and understanding what's really going on in this world, we're obviously looking for shorts, right? So at this point, this is 5 a.m. on Thursday. I was waiting for us to come out and take all this liquidity and tap into this 4-hour fair value gap within here, which we got, right? So you can see we've got a shit ton of liquidity built up here. So we got that tapping into there. If we draw out the fib from this high to low, we also tapped into that OTE level as well. Some people might want to do a fib on a higher time frame, but even then, still tapped into that 50% level, right? We tapped into that 50% level at 6:45. So I only take trades from 7 a.m. onwards. So at this point, I was waiting for... Oh, sorry, I skipped a bit too far there. At this point, I was waiting for any reason to get in short. Once we swept these highs, I can see we've taken out a lot of buy side liquidity here. Again, we're looking to short Euro USD based on all the macro narrative, the geopolitical tensions, chance of a rate hike. There's a lot that went into this trade, right? So at this point, we're just waiting for a reason to get in now. So we've taken these highs, tapped into this 4-hour fair value gap, also tapped into this premium level of this range. We then had a drop off from here, right? We had that drop off and we formed this 15-minute fair value gap. Also, not only this, we also invalidated this 5-minute fair value gap. So at this point, we're creating bearish PD arrays and disrespecting bullish PD arrays after sweeping buy-side liquidity and tapping into a premium. as well as all of the whole macro narrative and geopolitical tensions and stuff. This gave me everything I needed to want to enter the market. So at this point, I set my limit at this 5-minute fair value gap, which also lined up quite nicely with this 15-minute fair value gap. We got that tap in there, and yeah, price just flew to the downside. I mean, it did mess around for a little bit, but I mean, we did get there in the end. And not only did we just get there, but I mean, in hindsight, I would have liked to hold this a lot longer, because we absolutely flew to the downside here. So, but yeah, if you're not already seeing how you should be viewing the markets after watching videos like these and comparing it to the way that you're trading, if you're not trading this way in a market like this, when there's so much going on, there is so much going on in the world in terms of the US and Iran war, even just simple stuff like looking at PPI, CPI, and just understanding where big players and big institutions are likely to be positioning themselves in these markets. They're likely to be positioning themselves short, long on the dollar, right? So long on the dollar means everything against the dollar, you'll be going short. So if you're not thinking about the market like this, you need to tap in, man. You need to start understanding these fundamentals. You're missing out on an absolute gold mine here. So if you're at a point where in your trading you've got a good understanding of concepts and stuff, but you feel like something is missing, I promise you this is what is missing. It's not just technical analysis. I mean, technical analysis is great because it gives you that entry, it gets you them sharper entries, but that's all it does. It's a means to an end, right? We need to understand where the big players are, the big institutions are positioning themselves in order to be in line with them, and then hitting profit is just so much more probable when you are in line with what is going on in the world. So if you did want to get a bit more of an understanding of our views on the market and how we view the market and what we're looking out for, then you're feel free to book in a call with us on Discord. Get in the Discord as well, posting all fundamental updates in there if you're not in already. But yeah, boys, another lovely trade this week, all taken on live as well. So if you're not tuning into the lives, make sure you're in there. But yeah, great 2.36R secured on this Thursday. So hopefully that helps a little bit, and you can start looking a bit more at markets this way, using your intermarket analysis with US oil, Brent oil, US bonds. But yeah, anyway, boys, if you do need any help with anything, feel free to drop us a message. But other than that, I hope you got a bit more of an insight into our trading in this video. Nice one.